INBK is a stock to buy in 2021. Long before the word fintech entered the vocabulary, First Internet Bancorp, INBK, was pioneering the concept of online banking without the need for a traditional brick-and-mortar branch. INBK's subsidiary, First Internet Bank of Indiana, opened to the public in February 1999 and made history as the first state-chartered, FDIC-insured internet bank. Over the years, INBK expanded to reach a national customer base. In 2007, it acquired Indianapolis-based Landmark Financial Corp., which brought a retail mortgage lending operation into its product mix. Commercial real estate and commercial and industrial lending services were later added. INBK does not get the level of attention lavished on other fintechs, although it has not been completely ignored. It was named one of the best banks to work for by American Banker and Best Companies Group last October, and 2 months earlier it made the Indianapolis Star's Top Workplaces in Central Indiana list, placing 8th within the medium-sized company category. While the company might be somewhat under the radar these days, it is hardly underperforming. A vibrant balance sheet. Last month's Q2 and full year 2020 earnings report saw INBK enjoying banner performances. INBK closed 2020 with $4.2 billion in assets, up from $4.1 billion at the end of 2019. Q4 net income was a company record of $11.1 million, or $1.12 diluted earnings per share, but from $7.1 million, or 72 cents diluted earnings per share, 1 year earlier. For the full calendar year 2020, INBK's net income was another company record at $29.5 million, while diluted earnings per share hit a record $2.99. 1 year before, INBK ended 2019 with net income of $25.2 million and diluted earnings per share of $2.51. According to Chairman-President-CEO David Becker, INBK understood the market conditions of the pandemic period and focused on the growth areas amid a chaotic economy. Over the course of the year, we produced robust revenue growth, with our direct-to-consumer mortgage business delivering its best year in our history, Becker said. Our bankers met the surge in demand brought on by low interest rates, winning business with a demonstrated commitment to consistent, excellent service. Our expanding national SBA platform also steadily gained momentum and drove higher gain on sale revenue, increasingly contributing to our success throughout the year. Our pipelines in these key business lines remain solid heading into 2021. Not everything went perfectly for INBK in 2020. Its 2020 results included a $2.1 million pre-tax write-down of commercial other real estate owned, while total consumer loan balances were $482.3 million, down 23.9% year-over-year. INBK attributed that drop to increased prepayment activity in the residential mortgage portfolio and seasonally lower production in the RV and trailer portfolios. And while single-tenant lease financing was down, commercial loan balances totaled $2.5 billion, up 3% from the previous year, with healthcare finance and construction lending mostly fueling this activity. Trading activity. INBK is currently trading at $31.56, just a few percent below its 52-week high of $32.86. The stock has been enjoying an upward trajectory since its Q3 earnings report from late October, when it reported record quarterly net income of $8.4 million, record quarterly diluted earnings per share of 86 cents and $1.03 adjusted diluted earnings per share, and total revenue of $28.7 million, a 48.1% increase from the previous quarter. Of the 5 Wall Street analysts that cover the stock, 4 rated it a buy and 1 rated it a hold. The analyst's target price for INBK ranged from a high of $46.50 to a low of $36. Ratings. INBK has an overall rating of B, which equates to buy in our rating system, and in the 55-stock Midwest regional banks industry, it is ranks number 8. Bottom line. INBK lacks the flash of the New York financial institutions and the self-aggrandizement of the Silicon Valley fintechs. But in keeping with its Indiana roots, it is a no-nonsense, hard-working institution that quietly gets results. If its Q4 and 2020 earnings are any indication, it never relinquished the focus that enabled it to bring banking into cyberspace. This stock is a good addition to any portfolio. Thank you for watching this video. We appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire, and we'll see you in the next one.